This is Matthew Finn, and this is my case study on Starbucks Corporation. Starbucks is named after the first mate from the novel Moby Dick. The logo is inspired by the sea, which features a twin-tailed siren from Greek mythology. Starbucks opened its doors in 1971, and they were a roaster and a retailer of whole bean and ground coffee, roasted in small batches the European way. They also included tea and spices, and were sold out of Seattle's Pike Place Market. Now they have a connection with millions of customers every day in 76 markets. The types of products that Starbucks offers is coffee, handcrafted beverages, merchandise, and fresh food. They offer 30 blends of single origin premium coffee. Beverages, they offer fresh brewed coffee, hot and iced espresso beverages, frappuccino coffee and non-coffee blended beverages, smoothies, and Tazo teas. The merchandise they offer are coffee and tea brewing equipment, mugs and accessories, parched goods, music, books, and gifts. And the fresh food that they offer are baked pastries, sandwiches, salads, oatmeals, yogurt parfaits, and fruit cups. Now let's take a look at Starbucks' current financial situation. First, their free cash flow. Free cash flow is a measure of a company's performance calculated as operating cash flow minus capital expenditures. And Starbucks right now lands at $3.42 billion. What about their rate of equity? This amount of net income returned as a percentage of shareholders' equity. And right now, Starbucks is sitting at 75.83%. What about PE? PE is a ratio for valuing a company that measures its current share price relative to its per share earnings. And right now, Starbucks is sitting at 18.44. What about their current ratio? The current ratio is a ratio that measures a company's ability, short-term and long-term, to pay its obligations. And right now, Starbucks is sitting at 1.01. What about their current stock price? Well, their current stock price is sitting at $55.61 per share. These are all pretty good numbers. Let's take a look at some performance highlights of Starbucks in 2017. GAAP earnings per share of $1.97 grew 4% versus the prior year. Non-GAAP earnings per share grew 11% to $2.06. Non-GAAP operating margin expanded 10 basis points to 19.7%. And through dividends and share repurchases, Starbucks returned a record $3.5 billion to its shareholders in 2017. What are some of the new innovations for Starbucks? Well, in 2017, cold brew, iced espresso, and Teavana shaken iced tea fusions, as well as draft nitro beverages, drove up sales. Our digital relationships with customers provide convenience and value while introducing new products and becoming part of our customers' lifestyles. And our magnificent roasteries in Seattle have reaffirmed our coffee and tea leadership while capturing imaginations with their immersive interiors coffee-forward beverages. Rotisseries in key cities, as well as Starbucks Reserve brand presence in thousands of stores, will enhance our global brand and drive business to existing Starbucks stores. Let's take a look at the long-term financial targets of Starbucks, and I think these 4 points could really make this company even better if they can achieve them. First, global store sales growth from 3% to 5%. Second, annual consolidated net revenue growth in the high single digits. Third, annual earnings per share growth of 12% or greater. And the annual ROIC of 25% or greater. Now, the ROIC is a percentage amount that a company is making for every percentage point over the cost of capital. So if they're trying to achieve a 25% or greater, that's a nice goal to achieve. What does the future look like for Starbucks? Well, in 2018, we'll see a better year growth-wise than the last 2 years. Starbucks will also deliver as it is a quality company. The stock didn't move much on company earnings, but we could see some positive momentum following some changes in company policies. I really think that the future looks bright for Starbucks. Thanks for watching, and this is the case study of the Starbucks Corporation by Matthew Finn.